Good day, Junior Tikkies. I'm Mrs. Brimacombe. We are going to look at adjustments, and the focus is now going to be debtors. Now, before we start with the activity, we are going to go through some of the adjustments. First, bad debts. Bad debts means we've decided to write off a debtor's account as bad debts. Bad debts is regarded as an operating expense, which means that bad debts will be debited, account credited, debtors control. Effect on the accounting equation, assets minus owner's equity minus. Now it can happen that we've decided to write off a debtor's account as bad debts, but now we've recovered that money. When that happens, do not credit bad debts and say that our expense is going to decrease. Bad debts recovered must be opened. This is regarded as an income. So when a debtor whose account is written off, when that money is recovered, it means bad debts recovered is going to be credited, account debited, bank. Take note. If my bank has a favorable bank balance, it means bank is debited and my assets will increase. If we have an unfavorable bank balance, it means that bank is still going to be debited, but now my liabilities will decrease. Now, in any business, we need to make provision for bad debts. Provision for bad debts is always calculated on my book debt. What is my book debt? The balance of the debtor's control. Now, provision for bad debts is regarded as a negative asset because this will be subtracted from your trade debtors in note number 5, trade and other receivables. Now, we can either increase or we can decrease the provision for bad debts. So when our provision for bad debts is increased, it means that provision for bad debts will be credited, account debited, provision for bad debts adjustment. This will then be regarded as an expense, which will have a negative effect on my owner's equity. Take note. If my provision for bad debts increase, it will have a negative effect on my assets. When my provision for bad debts decrease, it means that provision for bad debts is debited, account credited, provision for bad debts adjustment. This will then be regarded as an income and will have a positive effect on my owner's equity. Take note. When my provision for bad debts is debited and my negative asset, it's minus, it will have a positive effect on my assets. Transferring of balances. So if we look at creditors, transfer the debit balance of a creditor in the creditor's ledger to his account in the debtor's ledger. This means a debit balance must be taken out where to the debtors. So, when it's taken out, it means creditor's control is credited, which will have a positive effect on your liabilities. Debtor's control is debited, which will have a positive effect on the assets. Many times, we take it out and we minus. But that is wrong. You need to identify what effect will that have on the balance. Transfer the credit balance of a creditor in the creditor's ledger to his account in the debtor's ledger. This means a credit balance, which is positive, must be taken out to the debtor's control. So to take it out, we need to debit now the creditor's control, which will have a negative effect on the liabilities. Debtor's control will now be credited, which will have a negative effect on the assets. If we look at debtors, transfer a debit balance of a debtor in the debtor's ledger to their account in the creditor's ledger. Debit balance means that it must be taken out. To take it out, we need to credit the debtor's control, which will have a negative effect on the assets, so that creditor's control can be debited. This will have a negative effect on the liabilities. Now, what also can happen, transfer the credit balance of a debtor in the debtor's ledger to their account in the creditor's ledger. So this means a credit balance needs to be taken out. To take it out, we need to debit the debtor's control, which will have a positive effect on the assets, so that the creditor's control can be credited, which will have a positive effect on the liabilities. Remember, with the transferring of balances, if we make a change to the individual's account, we also need to make a change to the control account. Whenever you get confused with this, draw a T account. Use it as a tool to make sure that you get it 100% correct. If we now look at activity 4, prepare the journal entries for the adjustments, post to the general ledger, and show the effect on the accounting equation. So the first adjustment that we're going to look at is number A. A debtor, Silver, was declared insolvent. His estate paid 80 cents to the rand, 4,160 was received and deposited and recorded. The rest of his account must be written off. So this means that we've already shown the amount that was received. The only thing left for us to do is to write off Silver's account as bad debts. So we're going to start with the opening balances and the total brought forward. From the pre-adjustment trial balance, debtors control have a debit balance because it's an asset. Bad debts, total brought forward on the debit side because this is an expense. So if I look at the adjustment, the total outstanding debt is equal to 100 cents. Of that, 80 cents was received, which means that 20 cents must be written off as bad debt. So to work out the amount that should be written off, we're going to take the amount which was received times 20 divided by 80. That equals the amount to be written off. Now, just for enrichment purpose, because it's not necessary for this entry now, to find out the total outstanding debt, you can add the two together, or you could have said the amount which was received times 100 divided by 80. So to show the bad debts to be written off, debtors control is credited, our assets will decrease. On debited, bad debts. On my accounting equation, account debited, bad debts, the same in the general journal. Account which is debited is always written first. Account credited, in my accounting equation, we're going to write debtors control. But when we write it in the general journal, you have to write the name of the debtor, which is Silver, and we need to say that we're going to post it to the individual's account. Effect on the accounting equation, assets minus owner's equity minus. At the end of the accounting period, we close off bad debts, where to the profit and loss account. So this will reflect my total expense for this accounting period with regards to bad debts. Adjustment number B. A debtor, Blue's account, is overdue for 6 months. He owed 2,000. He is to be charged interest on his overdue account at 15% per annum. From the pre-adjustment trial balance, we have a total brought forward. It will appear on the credit side because this is regarded as an income. Now we need to calculate what is the amount of interest that will be charged. His balance is 2,000. 15% interest will be charged for 6 months. Don't forget to say 6 divided by 12. So account debited is debtors control, account credited interest on overdue debtors account. Take note that I've now posted this directly in the debtors control account, and I'm going to do it with all the adjustments moving forward as well. The same with bad debts. I've posted it directly in the debtors control. I'm going to show you later on how do we post from the general journal to the debtors control account. To show the effect on the accounting equation and the entry in my general journal, account debited, debtors control in the general journal, the name of the debtor. Account credited, interest on overdue debtors account. Effect on the accounting equation, assets plus income. The plus will have a positive effect on the owner's equity. My narration, what happened? 15% interest charged on overdue account for 6 months. Now at the end of the accounting period, income must be closed off. Where to? The profit and loss account. So add everything on the credit side minus on the debit side. There's nothing to subtract. That is the amount which will appear in the profit and loss account. And this will be my total interest on overdue debtors account for this accounting period. Adjustment C. A receipt of 8,900 has been credited to the account of Pink. On closer inspection, it was found that this amount was paid by Purple, whose account was written off as irrecoverable during June 2021. So this means that we have incorrectly credited Pink account and we said that she made a payment. So we need to correct that. To correct that, it means we need to debit. And by debiting the account, it means it will have a positive effect on the assets. So debtors control will be debited, but now the account which is credited is bad debts recovered. Completing the accounting equation and the general journal, account which is debited was debtors control. So when we write it in the general journal, write the name of the debtor, and that will be posted to their individual account. Account credited, bad debts recovered. Effect on the accounting equation, my assets plus income plus, which means it will have a positive effect on the owner's equity. My narration, what happened? Account incorrectly credited. Bad debt was recovered. End of the accounting period, all income and expenses must be closed off to the profit and loss account. It means that bad debts recovered will be closed off, and this amount will be my total income for bad debts recovered for this accounting period. Adjustment number D, a creditor, yellow suppliers, reflects a debit balance totaling 3,700. This balance must be transferred to his debtors account in the debtors ledger. So we're going to start with, from the pre-adjustment trial balance, we have a balance brought down 80,000 on the credit side. Use the T account as a tool to know what is it that you need to do. They said a creditor with a debit balance must be transferred to the debtor's ledger, which means that it must be taken out from the creditor's ledger. This means the creditor's ledger / creditor's control will be credited, account debited, debtor's control. In my general ledger, Debtors control will be debited with 3,700. Account credited, creditors control 3,700. When we complete our accounting equation and the general journal, account debit, debtors control, and the name of the debtor. Account credited, on my accounting equation, creditors control. In my general journal, the name of the creditor. Effect on the accounting equation, assets plus liabilities plus. My narration in my general journal, what happened? Transfer a debit balance in the creditor's ledger to the debtor's ledger. We can balance the creditor's control account, take the credit side minus the debit side. That equals the balance carried down, means balance brought down. If we now look at our last adjustment, provision for bad debts must be adjusted to 5% of the book debt. What is my book debt? This equals the debtor's control balance. And this is it's often a common mistake in tests and exams. We calculate the provision for bad debts on the debtor's control balance in the pre-adjustment trial balance, instead of taking my new updated balance after we've taken all the adjustments into consideration. So when asked to calculate provision for bad debts, I always suggest open up a T account, debtors control, make sure that you show all the adjustments that is linked to debtors control and calculate the new updated balance. Now we can calculate 5% on 95,000 means that my provision for bad debts must be adjusted to 4,750. Provision for bad debts is a negative asset. It has a balance brought down from the pre-adjustment trial balance 7,200. My new balance should be 4,750. This means that we need to decrease the provision for bad debts. And as soon as we decrease the provision for bad debts, you should know this will be regarded as an income. So on my general ledger account, balance brought down means balance carried down. So take the credit side minus the debit side. That equals the provision for bad debts adjustment, which will be credited. And as I've mentioned before, if it's credited, if we need to decrease the provision for bad debts, this will be regarded as an income. In my general journal and accounting equation, provision for bad debts is debited, account credited, provision for bad debts adjustment, effect on the accounting equation, assets plus owner's equity plus. Because my provision for bad debts decrease, it's a negative asset, it will have a positive effect on your assets. Very important that you understand that. At the end of the accounting period, all income and expenses is closed off, which means that provision for bad debts adjustment must be closed off to the profit and loss account. If you now look at the general journal with all the adjustments, when we post from the general journal, we need to post the total of the debtors control on the debit and the credit, the total of the creditors control on the debit and on the credit. So posting to the debtors control, we're going to say journal debits, and we show all our calculations in brackets. From the debtors control Posting to the debtors control on the credit side, journal credits and the total. And you will notice the balance is exactly the same as in the previous example or previous debtors control account. Posting from the creditors control, the debit, it was 0. Credit, 3,700. In my creditors control, we will have journal credits. Thank you very much. Next, we're going to look at activity 5, where we're going to look at errors and omission. I want to leave you with this quote: education is the key to success.